This is like a slow moving train wreck. And I don't want to be a perma bear either, but I also think there's a reality that we all have to face, that the Federal Reserve is not going to be there to bail us out this time around, at least not at these current levels.
It really feels like, we're dancing at the end of the world situation, but it does create, I think, sort of a very murky macro picture. And I'd love to hear your opinion on where you guys think the markets are going. Let me ask you, Blake, what's your just general read of what the market is doing at this point?
Well, glad you asked, and thanks for inviting me back. It's nice to be back with you guys. We are in obviously a crazy macro environment, as you pointed out. A couple of things that are standing out most to me is the GDP numbers that we got today in the U.S. Now, those are backward looking, obviously, but when you match that with the current inflationary rate that we have, that spells, the S word that no one really likes to hear. But that is probably going to reverberate through the markets moving forward. And I think, we have so many young traders, so many portfolio managers, so many people that are sitting on desks that haven't been around as long as, unfortunately, the three of us have been.
Yes, exactly.
But you have a lot of guys and gals that are sitting on these trade desks that have never seen anything that what we're probably going to be experiencing soon. Then you put that on top of the massive amounts of investments and overinvestment. Some people would speculate into the crypto markets. It is very reminiscent of the late 90s, early 2000s, which many of us, myself included, remember very vividly. With many stocks that I had invested in, that companies that had eventually disappeared. You got that on top of everything else, and then everybody thinks that the Fed is going to come in and save us. But here we go, going into a Fed meeting, and you guys know, we see the writing on the wall. The Fed governors have been very clear on exactly what they're going to be delivering us, and I think the market is just walking right into it blindly.
Mm-hmm.
Interesting. What about you, Scott? What do you think?
Well, I love technicals and I love to do research, and a lot of all of my trades are technically based, but I love the fundamentals as much as anyone. But if you look at this market, a couple things. Number one, if you look at what does bullishness look like, so you go back and look at the chart and say 2009 March-ish, right? It goes straight up left to right. It never comes to a long-term moving average, never comes down. If it does, just barely, and it just keeps rolling. If you look at 2012, 2016, which is a sneaky bullish market. I mean, if you look at the charts, weekly chart, the thing goes straight up from 2012 to 2016. And then, of course, when Blake started, like you mentioned, 2000, 1999, or 1998 to 2000, or even to go back to 95, straight up, left to right, hardly comes down to even touch the moving average. But what's interesting, I think, is that what's happening right now looks eerily similar to what happened back in 2000. If you look at a weekly chart now, as opposed to 2000 when it was topping, it's scarily the same. Same thing in 2016 when the market took a big break. It looks eerily the same. And I think we forget, I mean, we've had a lot happen since 2020, but everyone was calling for a fall before the pandemic. Right in the 2019 and early 2020, Michael Burry and people like that were saying this market's got to fall. It's over. Index funds are going to crash the world. And then instead we got a pandemic, and then there it is. And then obviously we know what happened next. A million new traders got involved. The Fed came in and propped it up, and here we go. But honestly, right now, if we look at the charts, it is really, really sketchy. And I feel like with the Fed raising rates, which is what killed the bull market in 2000. I'm not optimistic, and even though I want to be.
Interesting. It's hard for me to argue differently. Although I will say, this market has been the what is that? The Mark Twain quote. The notices of my death have been premature. It's just been like they've been perma bears forever, and the market has just been very much of a like a RoboCop market. It just comes back from, or Terminator market comes back from the dead. So I don't know about the stagflation thesis at this point. Stagflation in the 70s was a function of oil like quadrupling, and it was literally the economy, because the economy was all industrial. Now, we could, like, the government could literally mandate. I mean, I'm sure this is going to be very popular with everybody, but, like, the Biden administration could simply say, look, in order to make sure that we don't, excessively use gasoline, everybody's on Zoom. Like, unless you're literally like a necessary worker, you're a physical worker. If you're a white collar worker, everybody's on Zoom, and you could just, contain demand that way. We just have so much more technology now that can overcome a lot of these stagflationary numbers that, I'm just not. Usually I'm the perma bear, but I'm just not the perma bear that everybody else seems to be at this point.
Well, at least we have Amazon to bail us out, right? Oh, wait a second.
Right, exactly. And Amazon. Speaking of Amazon, that was a big story in the closing on the close today, down 8%, kind of guiding forward weaker because, I guess post-pandemic demand, everybody's finally coming out and, starting to live life. So, not everybody's ordering every single thing, although I seem to be contributing my share to the GP still at this point.
We all think we're contributing our share to Amazon, sure.
Yeah.
but like, we can talk a little bit further about this whole inflationary story. Remember, you have a catalyst right now, and he happens to be, on the, east of Europe, and he's driving right now the inflation boat. And that is going to be it could be the Achilles heel in the global economy moving forward. And I mean, maybe better than me, but I don't know what to expect from Putin. And it.
But you really want to ask me what I think we should be doing, because I'm all for just nuking them out of existence. I think we either gonna have to nuke them now or nuke them later. I might as well do it now and just finish them off. So that's my Russian point of view of geopolitics. I don't think anybody else is going to follow my.
Very mild take, Boris.
But here, take my gloves. You take the gloves. So, but no, for real though. I mean, this is, you look back and you look on catalysts that drive whatever environment. It's easy when you're looking in the rearview mirror. But today we are faced with inflationary pressures because of not only what's happening, in the Ukraine, but also what's happening with central banks and the groundwork they've laid for the last dozen or so years. I mean, this is like a slow moving train wreck. And I don't want to be a perma bear either, but I also think there's a reality that we all have to face, that the Federal Reserve is not going to be there to bail us out this time around, at least not at these current levels.
Yeah. Speaking of Federal Reserve and just the craziness, the other crazy macro aspect of it is that we are like, where's the real rates? Like 500 basis points. I mean, Fed rates relative to real rates are just ridiculous. I think the widest they've ever been, right? I mean, the 30 years at 3%, inflation is at 8.5%. We are just so under, inflation that everybody's just chill. It's like really chill. Like rates really don't matter. They have finally started to move into the FX market. We'll talk a little bit about FX in the third part of the show, but it's just amazing to me, the complacency. You're right, and that sense is kind of really interesting.
What we have, what we're facing, Boris, is we are facing the Fed going into this, into this next week or the next month, excuse me, and we're going to have to next week on the 4th. So we're going to be. That might be the liftoff of real rates, where you start to see rates really rise, and you start. So I don't know. I know the jury's out right now, but we are seeing. Look at what's percolating in the FX market right now. Look at the dollar index. I mean, what is that telling you right now as a trader? That tells me that people are searching for dollars, and there's an insatiable demand for dollars across the board.